As a business broker, I understand most small business owners are looking for a way to quickly and easily calculate the fair market value of their business, or what's called a going concern valuation of their business. Hi, I'm Trent Lee. I'm the #1 business broker in the country for the last 5 years in a row. When it comes to business valuations, think AIM. A-I-M. A is for asset value, I is for income approach, and M is for market approach. We'll focus primarily on the market approach, but let me just touch quickly on the other aspects of valuations. The first valuation methodology in the AIM approach is asset value. This is where we take the business assets less the business liabilities, and that equals the asset valuation approach. Let me give you an example. Let's say the business has $100,000 of assets and $20,000 of liabilities. The asset value approach would state that the business is worth $80,000. This is usually the worst valuation, and it's not the type of valuation you want if you're looking to sell your business as a going concern or an ongoing business. The next valuation approach in AIM is I, for the income approach. This is a favorite of financial wizards and college professors. You'll learn all about it in MBA school. And frankly speaking, it's complicated and it's not relevant to small business owners. In short, you have to calculate the future economic benefit of the business. In other words, forecast financials, adjust for growth rates, taxes, working capital, and then discount the future economic value back to present value. It involves discount rates, discounted cash flow calculations, and capitalization of earnings. Honestly, I'm tired just explaining it, and it's not relevant for most small business owners. The third approach in the AIM method is the market approach. This is where we'll focus our time because it's most relevant for small business owners. It's quick and it's easy to understand, and you'll be able to calculate in the next 5 minutes what your business is worth. The basic premise is to look at other businesses that are similar in size and nature to your business, what they've sold for as a multiple of earnings approach. We'll talk about that here now. The value of your business is tied to the cash flow it produces or how profitable the business is. According to BizBuySell, the national average for most businesses from a market multiple standpoint was 2.28. That means once you calculate seller's discretionary earnings, which we'll talk about today, you can easily then calculate the fair market value of your business. First, let's talk about what seller's discretionary earnings, or SDE, is and how you can calculate it. If your profit and loss statement or your tax return shows a net profit of, let's just say, $100,000, we'll start with that figure and then we'll make add backs or adjustments, or what's called recasting the financials, from that baseline approach. This includes adding back owner's wages, personal expenses, and owner's benefits that have been run through the business. Let's assume you as a business owner have a $50,000 wage. Now that has to be W-2 wages, not distributions, but we'll use a $50,000 wage here in this example. Now, following the advice of your CPA who's trying to lower your taxable income as much as possible, you might have a number of expenses that you're running through the business that are owner's benefits that don't necessarily really mean they're true business operation expenses. For example, the business might be paying for your family's health insurance. You might have retirement benefits. You might have some a family gas card, for example. We need to identify all of those discretionary expenses or owner's benefits and add them back to the bottom line to properly calculate seller's discretionary earnings. Here's what the math looks like. Let's say that you've got $100,000 on your bottom line net profit to start with. You've got a $50,000 salary that you pay yourself on W-2 wages, and you have another $50,000 in this made-up example of discretionary expenses or owner's benefits. That gets you to a total of $200,000 seller's discretionary earnings. That's what seller's discretionary earnings is, and that's how we calculate it. Now, all we have to do is take the seller's discretionary earnings for your business times the national average of 2.28, and that gives you the fair market value of your business, or in this case, $456,000. Now keep in mind, a business broker will help apply the industry-specific average for your business. That might be higher or lower based on your industry. It's key to determine what the fair market multiple is for your business and your industry. That's why working with a business broker or an M&A advisor is so important. Once you determine the fair market value of your business, then you can make an informed decision. Is now the right time to sell your business, or should you keep it and continue to grow it and get a higher valuation? Are you ready to sell your business? I'll make this so simple you can't say no. Let's start with a free phone consultation where I help give you the fair market value of your business. I'll look up the fair market multiple of what your industry is, and we'll see how much your business is worth. Here's the best part. I'll never ask you for a penny up front. I don't get paid unless and until I can sell your business, and you've been paid at the closing table. My success is 100% tied to doing what I say I can do. Check out my link in the description and let's set up a time to talk. I look forward to working with you soon. Thanks.